Great to be here this morning, Merlin. My name is James Anderson. I'm the CEO and chairman of Guanajuato Silver. We're very fortunate to have today with us one of our directors and our chief operating officer, Hernan Dorado. Hernan runs the whole operation here in Guanajuato, Mexico. For some of your listeners who may not have followed our progress last year, we purchased the El Cubo mine and mill in Guanajuato, Mexico. It is a silver and gold mining operation. We purchased that from Endeavour Silver for about $15 million. We refurbished the mill. We started mining again in August. We started the plant back up in September. We had first sales of concentrate in October. And we're very proud of all of those milestones because it's very rare that a mining company can put something back into production over a 6-month period. And it's very, very rare that a mining company can be on track, on time, on budget. We kept saying that all the time last year. And sometimes, Merlin, if you say something over and over and over again, it actually happens. So that's what we did. And that's the nuts and bolts of our company. We're trying to continue to ramp up production and happy to take any of your questions about the operation or the company.
James, thank you very much for the introduction. Pleasure to meet you, Hernan. Pleasure to meet you as well. I'm really looking forward to it. You're a relatively new company, and I know very little about it. You know, here we are, El Cubo. It's less than a year now since you bought it. Is that right?
It is. We signed the definitive agreement in April of last year. Yeah.
Wow. So I'm going to want to talk about what you're going to be planning to do in terms of the exploration and the asset at the moment. But could we just, for my understanding, can you orientate me in terms of your operation? You've got 3 operating phases at the moment, or 3 operational areas feeding one central plant. Is that right?
I'm going to let Hernan take all of those questions because, as I said before, he's smarter than I am.
Hey, hello, James. Thank you for throwing me under the bus, but it's okay. So yes, we have 3 different ore sources at the mine. We have the Villalpando mine, the Santa Cecilia mine, and the Pinguico mine. All the 3, the Villalpando mine is where the Tajo plant is located, the processing plant. The Santa Cecilia mine is located 2 kilometers from the plant, and the Pinguico mine is located 8 kilometers from the mine.
So, the plant. So one at the plant, 1 2 kilometers and 1 8 kilometers.
Yes.
And you're processing 30,000 tons per month on average. Is that right?
Yes, that is the average of 30,000 tons per month.
So 1,000 tons per day. It's not a huge amount. And is it coming roughly 1/3, 1/3?
No, it comes 1/3, 1/3, but the feed is it's variable depending on the campaigns and the availability of the ore. The beauty of this is the capacity of the plant. It's 45,000 tons a month, and we are keeping at 30,000. Our mantra is quality, not quantity. So in that moment, we can start playing with the amount of ore that we're receiving, because El Pinguico, for example, is a low-hanging fruit. It's just right there, and we can put up to 1,500 tons a day if we want. With Villalpando and Santa Cecilia, that are underground mines with the richer values, that we cannot flood the mill with that amount of ore. So that is what we keep this balance. So it's but in the average is 30,000 tons a month.
Why do you describe El Pinguito as the kind of the low hanging fruit? Is it high grade? Is it bigger thicknesses? Have you got more development headings? You know, what makes it easier for you, or kind of the better option for you?
Yeah, for the Pinguico surface stockpile, it holds up to, before we start processing, it was 185,000 tons. And that is what we call it low-hanging fruit, because it's just an excavator to put in a truck, and there you go. So the mining cost is probably less than $5 in that range. So, and it's the amount of trucks that you can put there is the amount of feed that you can put into the mill.
And is the ore at Santa Cecilia and Villalpando and El Pinguico all the same kind of material? Is it? I mean, I tend to think you produce your numbers in terms of silver equivalent, don't you? But there's quite a major gold component.
Yes. So it's silver equivalent, but we have a gold and silver in the 3 different areas. The 3 different ore sources become from the same matrix. At the end there, what I said to James in the metallurgical side, they dance together. They have their constraints for sure, like every single material, but they dance together. So that is the beauty of this, that we can blend the three materials at the same time with the right proportions, and we got really good recoveries and really good grade on the concentrate.
If I can just add a little bit to that, Merlin, just to complement what Hernan was saying, these are all epithermal systems. They're all reasonably high grade quartz-based epithermal systems, very typical for this part of Mexico. At Santa Cecilia, though, the veins that we're targeting are transverse. They run at about 90 degrees to the main northwest structures at Villalpando, and for whatever reason, they are higher in gold content proportionately than the other deposits. So that makes them just a little bit different, and depending on how much Santa Cecilia material we put through, rather than sort of a value proposition that's 60% silver and 40% gold, all of a sudden we're kind of 50-50. One other point regarding that 30,000 average tons per month, as Hernan was describing. Sometimes we've been campaigning this material and sometimes we've been blending the material. And one of the things that I'm very excited about, because our team is very experimental, they like to try different things. We can, and we've been doing that through this whole process, and we're having good success with that, but it is one of the issues regarding explaining that to the market. So the average of 30,000 tons, where exactly does that come from? Hernan used the word variable. I think that's exactly the right word.
Are you kind of blending it on a conscious basis? Are you when you're talking about kind of the experimentation, are you saying, we're going to try and kind of do more development headings here? We're going to try and get a higher proportion from the gold-rich zones over there. Do you kind of do the reconciliation on rather, how far ahead do you plan the reconciliation and the kind of the blending? Is it week by week or month by month?
No, that reconciliation is done in a bi-weekly basis, and also at the end of the month when we cut the circuit and we close the circuit, we do the final reconciliation as well. So we do two reconciliations a month. If we have to put another material because the geologist found something that it was like low-hanging fruit in there, we put it through the system and we do a small campaign on that one. But that is what we do, Merlin. It's every bi-week we just try to reconcile what we're doing. And then at the end of the month, we close the circuit and we reconcile everything that has been through the system, so we can put the equipment in maintenance for 1, 2 days, 3 days, depending on the preventive maintenance schedule. And in that moment, we have that reconciliation because we have the concentrate in our hands. And in that moment, we can just trace back the grades, recoveries, and everything together with the campaigns that we do with the different ores. Every time that we have a new different ore, a new different kind of a material that we haven't tested for one area, the one different vein, we just put it through the system by itself. So we have that really good understanding of how it's behaving by itself. And then, but prior to that, we have our metallurgical team doing a metallurgical investigation. So we have the scheme so we can put it into the plant. As soon as we do the industrial trial or the industrial test, in that moment, we start blending with other different materials, with the one vein or the other vein or the Pinguico. So we can start just doing that and find the sweet spot. All the metallurgical team perform those tests, but as you know, the lab are optimum conditions. And the plant, it's a bulk one with not optimal conditions sometimes. And but that is where it's gonna be working and behaving. So that is the process that we know normally.
Do you have the same mining methods on each of your mining areas? Is it all subvertical, long hole, open stoping, or whatever? So I don't even know what you do.
We have two different mining methods. One is the mechanized cut and fill, where the veins are over 2.5 meters, 2 to 2.5 meters. If the veins are below 2 meters, in that moment we use risu. So we are more selective.
Sorry, explain that to me. I'm a hopeless mining engineer.
Oh, okay. Risu is when you it's like the cut and fill. You have your access. You take only the rich material. Let's say like the 1 meter that it pays and has the high grade, and then as soon as you take that one, you blast the walls, the hang wall, and the foot wall. So is your fill for the next lift, and so on.
Interesting. So you can actually mine 1 meter vein material without dilution.
Yes, with no dilution. That I wish I could do that. It's operational dilution of 10-15%, the normal one.
Yeah. But so you can take out material because I've got in my head that kind of mechanized mining, you need 2.2 meters more or less as your minimum mining width. But what you're saying is that with hand equipment and skilled miners, you can pull out one meter material and keep the grade more or less kind of with its integrity.
Yes. So that is part of a lot of working in the narrow veins. And in Mexico, we have a lot, in Guanajuato in particular, we have a lot of experienced miners, over 500 years of mining history, that they know and they can smell the high grade, So we have the geologist team, we have our procedures, and the guys, they do it pretty well. And it's pretty interesting because sometimes the vein that goes 1 meter, it goes to 2.5 meters, 3 meters. So in that moment, you switch from risu to mechanized cut and fill, and then probably 2 cuts, and then it's pinching again, and then you go back to risu. And that is the beauty of this cut and fill and risu, because you can blend it as soon as you're in the phase.
Yeah, what I was going to add, that this is really very much the mantra of our company, and really one of the reasons why we got this outstanding asset for such a small amount of money. We paid $15 million for El Cubo. The last time that it changed hands, Endeavour paid $200 million for this asset in 2012, and then they spent about $35 million building the plant that we've just refurbished. Now, what they wanted to do, and they built the plant too big really for El Cubo, the mine, right? So they were trying to run 45,000, 50,000 tons a month through there. So when you try and do that on a typical high-grade narrow vein system in Mexico, well, you're going to take a lot of dilution. Their average stope width was about 2.4 meters. Well, that's on an average vein that's 1.4 meters. So obviously you're going to be moving a lot of material, putting a lot of material through the plant. And what's very important is sending a whole bunch of material to the tailings facility that doesn't need to be taken. As Hernan pointed out, Mexican miners are the best narrow vein miners in the world. They're very good at what they do. I always like to say on the weekends, Canadians go and play hockey for fun. Mexicans go underground and go mining. We have a mantra that we will be more selective. Grades will be better. Our cost per ton will likely go up somewhat in comparison to the previous operator, but our cost per ounce we feel is going to be significantly better, and that will drive profitability.
Well, and I don't know if it's public information yet, but I think in your PEA you were talking about cost per ounce being just under $10 per ounce, $9.45 or something. Are you on track? Are you seeing? I know that there's inflation rife in energy costs are going up and labor costs and reagent costs and everything. So I'd be surprised if you're on track. But is it?
I'll take the first crack at that, and then we'll let Hernan talk about some of the details. So in these PEA documents, as you know, they're from 25,000 feet, looking at an operation, not on the back of an envelope, but I don't know, on the back of a very big envelope, right?
Yeah.
Some of the numbers are too high, some of them are too low. Also in that document, they felt that we were going to need, I believe the number was $24 million in CapEx to return El Cubo into production. We ended up doing that for about a third of that money. So, that number was too high. I think the $9.42 for operating cost per ounce of silver equivalent is too low. I mean, in our model, we never quite get there, right? In our internal model, we drive those costs down to about $12 over the next 12 months or so. Hernan, you want to add some color to that?
Yeah, no, totally agree with James. That is it's 25,000 feet above the ground, and it's kind of a, hey, come on, guys. But the reality is what James is saying. At this point, what we're shooting is to have this between $12 to $13 the ounce in that for the next 12 months. And we are pushing to get there, and I believe we're on track to get there. It's as we just mentioned, we just purchased the operation, and we're operating. We're in this stabilization mode, but we're confident that we're going to get there because we have the resources and we have the team.
And You know, I haven't even checked what the silver price is today. Where are we? Where has it?
I love it when it's 24. $24 handle, much better than 23 and way better than 22.
Well, it also makes the maths easier if your operating cost is 12. You know, if it helps a simple geologist, it's really useful.
Right. Okay. Fair enough.
But you know, in a sense, that's an operating cost, and you've got all of the corporate stuff, and you've got a kind of the expansion. But really, what you want this to be is kind of a steady state, cash generating enterprise.
Totally. Hernan, you want to say anything about that?
Yeah, I totally agree with that. It's we want to create that certainty for the shareholders, but for the people that works in here and everyone. It's that gives that consistency of jobs for the Mexicans, for the people, for everyone, and confidence to the shareholders as well.
In a business, Merlin, that's you know, often erratic in nature, you know, what we're really trying to do is to build a sustainable business, and sustainable environmentally, sustainable, you know, from a mining perspective. We don't want to try and take too much of the material out of this epithermal system too quickly, because as you know, it's very difficult then to stay in front of it in terms of new discovery and in terms of putting more material into a resource category. So we want to do it in a manner that's very sustainable. People have been mining at El Cubo, you know, on and off, but mostly on, for about 200 years. And, you know, we think that so long as we don't ask the mine to deliver too much too quickly, we'll be there. The PEA suggests a 7-year mine life with what we've got right now. I mean, you know, the way that we look at it, this El Cubo will be producing silver and gold material for another 50 years, you know, whether it's Guanajuato Silver that's doing that or somebody else. You know, we'll see. I'd like to think that it's going to be Guanajuato Silver for a long time.
I've got very little experience in Mexico, but I've seen some operations in Peru, these mesothermal things which kind of go down, and typically these private family-owned companies would have a year's reserve in front of them, or a year's mine life, and because you don't really want to drill them from the surface, you just kind of go ahead following your nose, so to speak. Now, for a public company, you can't operate on a year's basis. Am I right? I'm just trying to get my head around the numbers and kind of how much mine life you've got ahead of you. So if you're doing 30,000 tons per month times 12, that's 360,000 tons per annum. You've got indicated resources of 508,000 tons, I think, unless I've, you know, that's kind of, we're kind of looking at a year and a half. You know, what's the process of making sure that you've got that kind of that feed ahead of you, which is entirely kind of logical and probable in terms of the geology, but you've still got to go and do that work?
Yes, I will take a crack on that one, James, if you allow me.
Yeah.
So what our plan is, and part of our mantra, it's by the end of this year, we have to have 12 months in front of us, okay, of mineable resources. By the in the last year, we have these 12 months that we have the certainty that we have right now in front of us, okay, and we have even more. By the end of the next year, we're planning to have 2 years in front of us of mineable resources. Like, well, I don't want to say the word resource because it's so wow, careful.
Yeah.
But that's why I'm saying mineable resources, okay? And by the end of the following year, to have between 3 to 5 years in front of us, and just keep rolling that one. And the idea, as you said, is you have measured and indicated, but you have the inferred. All the inferred, the 100% of the inferred, you will not, that will not, I've never seen a company that 100% of the inferred goes into the equation. But if we take out 60% as of that and start adding that according to the mining plan, but the exploration drilling campaign that we're planning to do of over 25,000 meters this year is going to allow us to do the infill, but also keep finding more ore so we can put it in the inferred categories, and then start just working that normal process on the mining side of M&I and inferred that they're just depleting, but adding at the same time.
We've got 3 drill rigs turning right now. What we published about a month ago in a news release was that we'd be doing 22,000 meters worth of drilling this year. I can tell you that that will likely expand towards 25,000 meters worth of drilling this year because we've already established some additional targets. One of the drills is working at Villalpando in very much an infill, expansion kind of capacity. One of the drills has just started at the Santa Cecilia area, which has been, which was, I don't want to say ignored, but underinvested in with the previous owner, because they felt that the narrow veins there, just that, couldn't provide enough tonnage. They weren't interested in. They're very good grade, historically, some of the best grades at El Cubo. And there's just obvious drill targets. When you put a section together, put a plan map together, you go, well, how come there's no drill holes there? So, we'll be starting that within the next week in that particular area. And then we've got our own drill that we bought last year that had some pretty good luck early on last year at Pinguico. It's drilling from a different setup to start 2022 into an area that's further north in the mine. And we've got, I think it's 8 drill holes planned here for the next 2.5 or 3 months there. And then they're not. No, it's you see, in Mexico, if you drill from surface, then you need a permit. Right. But if you drill from underground, you really don't. And so this drill setup, Merlin, as an exploration geologist, you would love it, because you only need to be about this far underground to not need a permit. We're at least this far underground. Yep. So there's another access, an older access that the old timers use to mine Pinguico. We've got the rig set up in there, and that's where we'll drill this fan of 8 holes. And also, I know, sorry, Ryan, go ahead.
No, just to complement that, is that drill that we purchased has been handmade or custom made for this particular mine. So you can fit that drill in a drift that is 2x2. It can fit it. So, the old workings are normally that size. So that is really helpful for us to fit that drill in there in the conditions that James is mentioning. And it helps us to reach some place instead of drilling 500, 700 meter drill hole. It's only 200 meter drill hole.
Merlin, let me just add one more thing if I could, because I know a lot of the Crux viewers over the last number of months have been watching Guanajuato Silver. One of the things that I was promoting certainly early last year was our ability to be able to drill to Veta Madre, which has a storied history. It produced 1.2 billion ounces of silver over centuries. That structure will almost assuredly cross onto the Pinguico ground, and where it comes into contact with the Pinguico vein system, that is a really exciting drill target. We've had different ideas over the last 12 months about how we might best drill it, and also, of course, we put on hold a while back looking at that target as we put El Cubo back into production. And I think you can appreciate, that had to be our focus. But we will likely get drill permits within the next 60 days to drill for Veta Madre. We'll drill those holes from surface and from the most southerly part of our claim boundary, or of our claims, because the claims sort of angle south and east towards Veta Madre. So we'll be closer and closer to that structure.
I love it. It's called the mother lode, the mother vein.
Exactly. Yeah. There's a surface expression like for about 30 kilometers that you can see this structure. Like it's a regional feature. And where the old timers, like at the old mines of Valenciana and Reyes and Cata, about 10 kilometers to the north, they were producing in the 1700s about 40% of all new silver in the world at that time.
It's certainly got the heritage. It's got the mineral endowment. Are you going to be able to fund your exploration from the operations? Is it integrated yet?
What we're planning to do, the answer is yes. What we're planning to do is to be as much as cash efficient. What I said to James, I don't want to ask money to Canada. We can do it in here. We can work all the operating costs as much as the capex with the initial capex. That is the big thing internally, and that is the answer. I don't want to ask money to James.
Okay, but so it's the desire, but not the hard plan.
It's the hard plan. We're EBITDA positive right now, Merlin. Within the next 2 months, our revenue will cover all OpEx and all CapEx expenditures for the year. We do have a $7.5 million loan outstanding that we need to address. Silver keeps going up like this. We can address that all out of cash flow as well. But that's the only thing where we would have to add additional capital. And we've already been in discussions with our lender to basically extend that loan into the future somewhat to ease the pressure on cash flows as we get into the fall.
Gotcha. And just for my understanding, I'm just kind of gradually getting my head around it. You've got these 3 development headings. You've got these three operating centers feeding you 30,000 tons per month. I've just seen you've been buying in some third-party ore. Is that just to kind of, what's the story? The story behind that is that a sustainable source? Is it more profitable to run your mill at a higher throughput rate?
I'll talk about the 4,000 tons, and then I'll let Hernan talk about the profitability and whether we want to run the plant a little more towards capacity. So we obviously have excess capacity to the tune of about 15,000 to 20,000 tons a month through our mill. We got the first chance, and again that this is only 5 or 6 months after restarting the plant. We got the first chance to in this case buy third-party ore and process it at our plant. So we took advantage of that, and we made a big news release about it and kind of put the we're in business in Guanajuato sign out there. So there's a number of other opportunities, other places that we can get third-party ore, whether that's toll milling or us purchasing raw ore. If it makes money, then we're interested. That particular 4,000 tons we've already processed, made into concentrate, and sent and sold that concentrate. So that worked very well. Hernan, what do you comment about doing more of that in the future?
Yeah, my take on that one, it's as you ask a question, an interesting question. Is that profitable? It depends on the grade of what you're feeding, because at the end it's a balance of not putting your own ore, your tailings capacity, but also the profitability. You're not pushing the mining group so hard so you can get some free ore. It's a balance. It's not just a straight answer of that one. The most accurate answer will say it depends on the grade that you're feeding. Just to give you an idea, as soon as we did, and James said, we put a sign of we're processing third-party ore, we have several miners just approached to us saying, hey guys, is that possible? How can we do that? And at this point, as James mentioned, we're in this stabilization mode still. That was a particular scenario that we did for our neighbors, and for that particular reason. But now it's something that we will start looking as a potential business strategy, because we have a spare capacity. That can we do it? The answer is yes. Do we want to do it with certain constraints and assumptions and implications? Yes, probably it's a potential opportunity.
I guess you've also got to think about the reputation risk, kind of the ESG component, the safety, what happens if there's an environmental liability on an operation that you don't have control on? It's provenance, really. You've got to take a look at how they are operating and that you're comfortable buying ore from them.
Exactly. And that is tied to liability, as you mentioned. So it's not just like, hey, I can process ore. No. We send our team there to understand first the mineralogy, to understand how is the geology working, also to understand the safety practices, everything. Because at the end, there's a potential liability there that if comes, we have to have the support to push back or something. So it's a tricky question. It's a tricky item. But we're not close, but we're not saying that we're going to do it straight away. It depends on the different circumstances.
Okay, so that's a little sidecar, but really the main business is your 3 operations, expanding the resource, pushing out that mineable resource, as you call it, nice phrase, out to 1.5 to 2 years. And James, how do you see the company being appropriately valued? I know that a CEO will always say that the share price is going to go up and that there's huge value.
That's obvious.
That's obvious. But
the share price is going to go up, and I cannot believe how grossly undervalued our shares are.
Yeah.
Yeah, I think every CEO has to frame things like that. I think with regards to Guanajuato Silver, I think number one, I think that our shares in 2021 performed materially better than just about anything in the marketplace outside of a real discovery story that where their shares took off because of a new discovery. Development stories and production stories, I think whether they're bigger than us or smaller than us, I think that our shares perform better. So why is that? I think it's because we principally delivered on time, on track, on budget, what we told people that we were going to do. So that's good. I think we've got a number of months in front of us to be able to sort of consolidate our gains, to get smarter and wiser about how we're mining at these different areas, about some resource expansion and some real discovery at Pinguico. I think is a very viable, a real possibility. And then the other possibility that I've been talking about since we started on this project, Guanajuato is a 450-year-old mining camp, and it's divvied up. Ownership of claims, old mines are divvied up. Hernan went to the university here, got his mining engineer's degree here. When he was going to school here, there were 11 mines in operation. Today, as we speak, I guess it's 3 if we count Pinguico and El Cubo and Bolonito, Endeavor's other mine. So I think that I continue to think, and I've stated before, Merlin, there's all kinds of potential for expansion in this area, and I think consolidation in the mining business in Guanajuato is a very real possibility. We're called Guanajuato Silver for a reason, because we want to drive that consolidation in the industry.
Yeah, great. Thank you. When I look at these kinds of companies, I always try to see what the risks are. And I kind of think to myself, narrow mine, narrow veins. And then Hernan describes the mining method here. And I think, that's interesting. That's kind of flexible and dynamic. Another one, I ask out of ignorance, grade variability on the structure. I know that these have been mined for hundreds of years, but do you see significant grade variability? Do you see mineralogical variability where you suddenly get to a bit where you can't recover the silver or can't recover the gold, or it's not there? What's that picture like?
Yeah, for the geological side, it's there's a great variability for sure, because it's a epithermal vein. It depends on the plunges. And if that happened 100 million years ago in the morning or at lunchtime, and that's what we just talked to the geologist. But what we're doing in there to understand and to ensure quality control, we have chip samples or the failed samples every 3 meters. So we have that understanding of the working phase. Okay, and that will tell us exactly which places it pays the cutoff and which places doesn't pay the cutoff. Then an important thing to note, and that is something that hopefully us in 20, 30, 40 years down the road, or not us, or other people, with that information of the blocks that didn't pay the cutoff, that we're using that as a backfill, they can go back probably 50 years from now and start extraction of that broken material that probably at that time it will pay. The same thing that we are everywhere in the world doing right now for thing that it was mined 50 years ago. That is on the geological side. On the metallurgical side, that is a component of the free gold that we have in the Santa Cecilia. That is one of the things that our investigation, the metallurgical investigation department is working pretty hard, and to understand how can we increase the recovery in Santa Cecilia from 80% that we have right now, 1, 2, 3, 4, 5% on the Santa Cecilia particular material, and that is really interesting to note in there, because it's as James mentioned, the investigation, the R&D is extremely important. Not just in the space business, not just in the medical business, in every single business, and the mining industry is one of them.
Yeah, no, absolutely.
I want to say just one other thing that complements something that Hernan was talking about, and I think that for your audience, whether they're technical people or just smart investors, they'll be able to appreciate this. So, we're in terms of grade control, right, super important for these epithermal systems, right? Variable grades, absolutely. So we're taking channel samples every 3 meters for sure, but we just built our lab in November. In December, we were able to do about 150 samples a day. Today, we can do 400 samples a day. So now we've finally gotten to ourselves to the point where we can take all of that information, turn it around real fast, and that has an immediate impact on grade control.
Good. Thank you so much. I understand the company so much better now, which is the whole point of doing this conversation. And I've seen time and time again that the companies that do well, the share prices that kind of keep going up, are the companies that do what they say they're going to do. And starting from a modest production base, you can grow. So keep delivering. Keep those exploration rigs going, and good luck to you. Is there anything that I've missed? Perhaps things you want to talk about that we haven't spoken about? But I'm excited about the steady state. Getting that sustainable, deliverable cash flow to fund the exploration. I'm excited about to hear what you're going to find during the course of the year.
Hernan, any last comments for the viewers out there?
Yes, for sure. One last comment that I would like to say is like the entire operational team is Mexican. That is something that, as James mentioned, even in the Canadian offices, there is almost half of the people is Mexican Canadian as well. And that is so important for us to be proud of, that a Mexican team that is 100% operational is delivering, is achieving the goals. And that it will not come without the support of the board and without the support of James and the support of the entire management team everywhere in Canada, and investors, and even in Mexico as well. So that is quite important to note, and how the Guanajuato, as a 400 years of history of mining, has provided a lot to the world. Now it's providing a lot to the Guanajuato Silver, with a lot of people that has been getting up from the mining school that is working right now in our company. And yes, it's going to be something to be proud of for sure.
Thank you. James?
As you mentioned earlier, when you're a public company, there's a lot of constraints on what a person can say about things. Hernan and his team are working on a number of different things that that are working out well, but we're not really comfortable about discussing. This is an excellent forum, and these are excellent questions, Merlin. What I'd really like to do is to get back with you, in 60 days or so, and maybe refocus the conversation on a couple of other things that we're working on here right now.
Yeah, I'd be quite keen to dig a little bit more into the exploration and the geology side of things, and keep digging.
Fantastic. Well, and as you know, there's always a good rivalry between thinking of the geologists and the mining engineers. So next time, what we'll do, as well as have Hernan on, is we might have Lauro Barajan, who's in charge of our geological exploration, on board, and some of the exploration and more theoretical questions regarding the whole evolution of the epithermal system. Lauro would be happy, I think, to be able to engage in a conversation like that.
Yeah, great. No, we need the Hernans of this world to deliver, but in tandem with the Lauros as well.
Exactly. That's what makes the team.
Great. Nice talking to you. Thanks so much.
Cheers. Thanks again for the opportunity.
Bye-bye.